Thank you, Jason.
Thank you, guys.
Conversation. All right, next up, we've got a great panel. We're going to be joined by Jeremy Adelman, who's a utility strategist in the electric vehicles and emerging technologies team at Austin Energy. Judy Lee, the vice president at Energy Foundry, and Zpryme's own senior research analyst, Joyce Dueley. We're going to be talking about a really important issue of the economics of equity. So Joyce, I will turn things over to you, and please, everyone on the call, join me in welcoming our panelists.
Yeah, thank you, Erin. Hi, everyone. So happy to be here today for our start at ETS. Really excited about our panel discussion. You know, the COVID-19 pandemic has really highlighted inequities across systems and communities, and we've seen the rise of social impact and environmentally focused companies rising to the occasion. And in this panel, we're going to explore how investment and economic models have shifted and how startups can best position themselves in the world. But I would love it if we could just have a minute to have our panelists say a little bit about themselves. Judy, would you like to kick us off?
Sure. So sorry I missed that earlier intro. I'm not sure if some of this might be overlapping what's already previously said. But I work at Energy Foundry. I'm sure a number of folks in this room or across the rooms I might have interacted in the past at previous Start at ETS events. So I'm glad to be back. And so Energy Foundry is a venture fund that invests in early stage energy and clean tech startups across North America. And we typically are investors in the Series Seed and Series A stage. And the topic of this panel has been front and center for us recently, looking at our pipeline of opportunities, potential investments to invest in. The reality is that there's not a lot of diverse founders. It's mostly white men who are founding companies in this space. And within the venture community, it's a lot of that same representation in the investor seat. And so at Energy Foundry, once in a while, we try to have conversations to figure out how we can change that. And so I'm happy to discuss that with the team or with everybody here today.
Awesome, amazing, thank you. And Jeremy.
Hi, everybody. Thank you, Joyce. I'm really happy to be here. I work at Austin Energy. I'm a utility strategist in the electric vehicles and emerging technology group. I've been there about a year. I've worked in innovation and startups for, I would say, almost 20 with these communities, and focused on electricity and energy innovation for probably the last 12. Which started with, a stint at Energy Foundry, in Chicago, where I was lucky enough to be, a member of the founding group there, and have had both operational roles and consulting roles. In terms of startups, I have been an investor. This is my first time on the utility side of the equation, and I would say that I am learning a ton, and how the kind of perspective is definitely different from all those assumptions that we think through on the other side are both right and kind of totally off a bit. So I'm glad to have that perspective now as well.
Excellent. Thank you so much. It's going to be a really great conversation. We're so happy that everybody can join us today for it. I know that it's a little interesting or a little odd to be talking about equity and inclusion and not necessarily have all of the representation on the panel, but we're very happy that you're both here and that we can dive into this topic because it's very necessary to talk about regardless. And so with that, let's go ahead and get started. So for both of your perspectives, and maybe Judy, you can lead us off, but how has the focus of investment shifted over the past year as a result of COVID-19?
Sure. There's been a lot of changes in the last 12 months, one of which we're totally virtual right now. But during this time, venture funds, investors have largely stayed busy with being able to transition into a virtual environment pretty quickly. We are as busy as ever talking with startups and working with companies that we've invested in. And I think that some of the changes in respect to equity, inclusion, diversity, and these topics that have become front and center even more so in the last 12 months for everyone. I see a lot of investors who are interested in either prioritizing their investments around certain, teams with compositions that don't just look like white men as 100% of the management team. I see other funds that are focusing on asking the companies that they might invest in and the companies they've already invested in for metrics around equity, inclusion, diversity within those teams. Also on impact metrics around what ESG, what environmental and sustainability impact metrics does your company bring to the table. So I think as far as like specific advice I'd have for startups, it would be just be prepared to adjust those questions, whether it is about the management team dynamic, the makeup composition of the team, the potential impact that the company and the product has on the market. Just be prepared to talk through that and be open to what the investor is looking for. A lot of times those conversations are a dialogue back and forth depending on what the investor is looking for and what you've already prepared.
Fantastic. Thank you so much. And Jeremy, your thoughts?
I mean, I think for a lot of folks, the last year in some ways was an awakening, and the disruption of our lives in with COVID has really allowed for folks to focus on the realities of some of the inequities that are out there in a way that they haven't ever been able to in the past. And one of the things that I find hopeful from this time is that just the fact that this dialogue is out there now in a way that wasn't before, I think is so positive and necessary for our society and for groups. And I think that I left when our prep meeting, with the realization, we are at such an incredible moment of opportunity for new companies right now. There's so much pent up demand based on, what COVID has done to economies, economic slowdown. The Biden administration is looking at pumping $2.5 trillion into infrastructure. And the fact that, infrastructure has really always been linked to winners and losers in marketplaces and shapes markets and shapes who has access and shapes who has an easier time succeeding. I'm certainly happy to debate that claim, but I think there's a lot of historical precedence for that remark. I think that this is a moment where we can take head on some of these challenges in a structural way that hasn't happened in a long, long time. And I'm hopeful that we all as a group have, and as society have, the courage and the skills to pull it off, because it won't be easy.
Yeah, no, thank you for that. So from your perspective then, what can entrepreneurism do to support this economic recovery and, bolster the work that the infrastructure improvements are going to be doing?
I think for entrepreneurs, it's really about understanding the impact. I also think that there's look, in terms of the last few cycles of innovation, I keep thinking what's the next disruptive thing out there? Now, Judy, like, you guys are closer to deal flow than I am right now. So maybe that's just because I'm a bit more out of the loop than I used to be. But, in terms of truly disruptive ideas that restructure and rethink how we do business, I think what's interesting is that, venture has traditionally made money through the scale of software as an unfair advantage. Right? Disruption happens through, software scalability, and infrastructure can be that, but it can also be roads and bridges and other stuff, and will be much more capital intensive. So I think for entrepreneurs who are focused on software products and services around that, I would say find the niches where the pull into the market is just going to be strong. Like always, those fundamentals will be there. And then I would also say there are unique opportunities, I would say, for prime contractors to reach out, especially to women-run and minority-owned businesses as part of what will be a huge federal government allotment of capital to start building out these products. And those create unique opportunities in terms of founders. I think solving the problems requires an honest look at the data and the impact.
Excellent, thank you. Judy, do you have a follow-up?
Yeah, so I think Jeremy, you teed it up pretty nicely. And so just to go a little bit deeper on at least my perspective on these things as an investor. So I agree with like private capital funding startups, whether it's, angel investors or VCs, corporate venture capital funds. Most of it does go into software companies. And that's the hard reality of it, which is arguably not everything we need in order to make change in the society and in our infrastructure. And so I see the software innovation model, for the most part, and I'm roughly generalizing, if it's B2B or B2C kind of software plays, the customer acquisition is like that process of how you get customers is pretty well known. It's like there's a marketing playbook. You can, wow the customer, whether it's a business customer or a consumer, and try to get more customers to sign up to your platform, to your software solution. And venture capitalists are very comfortable with investing in those kinds of models because even though it might be a new solution, a new software platform, it is still like another version of a similar playbook. But then with infrastructure, there's only so many investors who are willing to invest in a hard science technology that needs to be plugged into the broader infrastructure. And the business models for how you sell into that space are different because these industries are all distinct that you might be selling into, and it's hard. And so that's why I think there's less private sector investment into this space, and they see it a lot as like, well, the government needs to fund improvements to infrastructure because only then do we have the power and alignment with like policy and the government's priorities and like introducing new technologies. But it hasn't really worked out for the last few decades, and so we'll see what this like new infrastructure spend plan has in store for us over the next few years. But the advice I would have to entrepreneurs who are trying to deploy their technologies into the infrastructure space would be the framework for how we look at a successful business model, I think still applies, which is working really closely with key partners and key players who are forward thinking in those spaces, whatever sector you're targeting in infrastructure. There's usually like a either front runner or a like second place company that's like willing to invest in infrastructure in order to gain market share, or not infrastructure, in technology in order to gain market share. And so identifying those key potential partners that will be with you to help develop your technology, pilot it, work with you to get into the market is so important, because otherwise it's really hard to break in.
Thank you. So shifting gears a little bit to kind of go back to one of the main notes of this topic is, the role of inclusion and diversity, and how has the role of inclusion and diversity in VC investments changed, or has it not changed enough? Judy?
The role of VC investment in infrastructure? Sorry, I might have misinterpreted.
No, sorry. Shifting gears a little bit to talk about the role of equity and inclusion. How has that shifted within VC investments in the last year or so?
I think a lot of venture capital funds are talking about it more. And it's a whole industry shift. So it's worth mentioning that all venture funds, almost all venture funds, have their own investors who invested in the venture fund. And so those, limited partners, those like investors into venture funds are also becoming more aware and interested in quantifying the impact of their investments. And so whether it's the impact of their investments, the proportion of the capital that's moving towards, not solving, but trying to help with some of the equity issues, inclusion issues in this space. And so I do see a lot of movement in both like the venture fund level and wanting to seek out diverse founders, wanting to seek out companies that provide solutions that help aid some of the inequities in society. And then also the LPs who are interested in funds that do have that front and center. So I think that's been a really positive shift in this space.
Excellent. Thank you so much. And Jeremy, your thoughts?
Yeah, I mean, I don't know the exact numbers. It would be good to dig out those numbers at some point. But my hunch says that overall as an industry, it still sucks, to use a scientific term, right? I think the myth of Zuckerbro and the archetype of of what it means to be a startup entrepreneur in our country is still largely seen as a white young dude with a hoodie. Like that's the default. And I think that part of the mythos of that has to change in order for us to start to break through. And I'm not saying that there aren't amazing female entrepreneurs, there aren't amazing Black entrepreneurs. It's just that is the default stereotype, right? And there was a Harvard Business Review article a couple of years ago that came out, and the title of it stuck with me. It's called "Birds of a Feather Lose Money Together," right? And essentially what it was saying is it was looking at private equity firms and all the venture firms and where their founders were educated. And oh, guess what? They're all, Harvard and Yale and Princeton and all the Ivies and Columbia. And these are all really fantastic schools. But what that meant is that there was a homogeneity of thought around how to make decisions, about how to look at the market, about how to make money. And so what it meant is, oops, I can't talk to my wife right now. Sorry, sweetie. So it is, there was a correlation between, negative returns and, only having homogeneous founder groups. So and this is just like one example, and this is pretty well established, right? Like the diversity is good for the bottom line. We all say this, but I think it's still incumbent upon LPs and us as utilities to put our money where our mouth is and make sure that our indecisions wind up in creating more opportunities for folks. And I think the mindset has to really shift as well from a policy side. I was on a meeting with a bunch of stakeholders from Austin talking about climate equity and moving forward and creating a plan and working on the transportation electrification piece. And we were talking about economic development as part of this. And there was some person who said, the way you really have an impact is, by bringing in more jobs to these communities. And I think it's short-sighted. What you really need to do is, we live in a capitalist society. You don't need people who have paychecks. You need, more minority business owners. You need people who own the equity in these companies, who own the jobs. And when you start getting the power to shift, the economic power to shift, and to start to pool, is when I think you can start seeing some additional advancements in equity.
Great points, Jeremy. Thank you. Judy, do you have anything that you'd like to add?
Jeremy, you did a great job.
Yeah.
Yeah, it's capitalism is a thing, right? Capitalism, the foundation of like so core to American society, yet so contradictory to equity. Like it's tough. And so as venture investors trying to use the capitalistic model to make money, it's like I see the biggest impact we can have within the like capitalistic model is to bring, invest in companies that bring wealth to underrepresented groups of people, whether it is an underrepresented founder or it is, the product is providing something really valuable and like help generating wealth and prosperity for groups that have not been able to benefit from tech and development, from VC-backed tech and development. So that's a big question for venture capitalists and how they can participate in all this within the capitalistic structure.
Thank you. So to touch on something that you mentioned a little bit earlier, that software platforms and infrastructure improvements don't necessarily always go hand in hand. But from your perspective then, what's the role of social impact startups as part of the recovery from the pandemic?
So there are, I think most folks here today who are trying to make the grid more resilient, be able to take on more renewables, like all of these things are like social impact as a result of your company succeeding. And so I think that the umbrella of like what it means to have like a social enterprise and have social impact as part of your business is huge. It's a huge subset of like startups that are pursuing venture funding. And so I think that in this like post-COVID recovery time, of course, keep an eye out, for example, this, $2 trillion investment, into infrastructure, this big bill. Keep an eye on how the policy is moving, because there's a lot of pent up interest and demand from the public in like moving things forward, and like just try to be nimble as startups always are and pivot towards the opportunities that will uncover, will present themselves very rapidly. Actually, I think in this space, there's so much movement in the private, like just look at the stock market and where people, who have this extra income right now are trying to push, various impactful solutions on the private market. There is, or not the public markets, and then the kind of public infrastructure spending and the new bills that are coming out there. That's a huge opportunity for creating new markets that startups can be better positioned to go be part of.
Jeremy, your thoughts?
I think there's a fundamental shift happening right now. At its premise, social equity startups leverage the infrastructure of capitalism to do good in the world, right? And where I think, and trust me, I'm a capitalist and I love this stuff, but I think some of the definitions for how our markets operate are changing. And what I mean, I joked about this, the other day too, right? Like, Friedman is dead, long live John Maynard Keynes, right? So globally, what you have is a shift between like all this tension between the United States and China in terms of what is a capitalist model, right? Where you've got a kind of a totalitarian structured capitalist system versus, what our more free-flowing organic system looks like. And I think when it comes to infrastructure, because at least for startups, if we want to solve big problems through innovation that are infrastructure problems, it takes a lot more than a couple private equity companies, except for some of the largest, right? And if you want proof, that I'm right on this, how many high-speed, trains do we have in North America, right? So from a structured point of view, the ability to move these massive amounts of capital in order to solve change and to take bets and to take on that risk that sometimes public markets won't take on. And when this infrastructure is linked so closely to equity issues, I think it's where you have to say, all right, well, this is where government does get involved, or this is where coalitions get involved. But we may be moving beyond a space that's just purely talking about like private syndication of private capital around smaller ideas. And when I'm talking about like where is disruption happening in this cycle and at what scale, that's what I mean. It's much harder for software companies to disrupt at the scale that we're talking about, I think. Maybe I'm wrong. I mean, we've disrupted in the past, but like, I'm just saying, fine, we've had the internet. What's next? 5G. Okay, that's infrastructure. Tell me is it blockchain? Ooh, no. So like, where is the the next software technology that's really at a disruptive, massive scale? I haven't seen it yet, or even the inklings of that market. I think we're still trying to putter around at the edges.
Yeah, I would agree with you for sure on that point. But I think that we're getting closer to finding whatever that next thing is. And maybe some of these external forces are pushing us closer and closer to seeing what the big break. As a result of that, then, do you feel that startups need to kind of change their approaches to funding compared to what we used to do, and now moving forward, what that looks like?
So I can go first. So I think with approaches to funding, what's been really exciting is, especially in this space where it's about, integrating more renewables, making the grid more reliable, kind of a lot of the focuses of the startups that are in this room here. I think that there's increasingly more venture capital funds that are raising more funds or forming new venture funds forming that will look at this space. And so I think that's pretty positive. Hopefully, go back. All of you have been, I'm sure, great at networking with other investors. Go back to your list, but also try to see if you can add to it, because in the last year and a half, there's been a lot more capital flooding into this space. And so definitely try to take advantage of that. I think as far as pitching to investors, the general pitch of, everything you've heard of making sure you're explaining your problem and your solution and how it's unique and how it's different than everything else that a utility could do or whatever your customer could do instead. All of those things remain the same. Investors are still very interested in understanding those points. So make sure you continue to be sharp on everything you've already been preparing in that structure and flow. I would also just be ready to answer, be ready to talk through the potential environmental impact that your product, at scale could have. And, whether you have that number or not, being able to think through that line of logic for what your product enables in terms of impact on society is going to be increasingly important.
Jeremy, thank you. Or sorry, Judy, thank you. Jeremy.
Thank you, Judy. I think I agree with all that. My one takeaway, and I think the perspective I'll add, comes from now having this utility lens, and all my utility colleagues who are on the call, please, agree or disagree, right? I think that where you're right, Judy, is yes, do all the business fundamentals have to be there? You've got to be solving a real problem. You've got to, your solution has to make sense in light of what that problem, all the startup-y stuff, right, has to work. When it comes to this market, especially if utilities are your customer, one of your biggest pain point hurdles is how does it integrate within the utility system, right? Because you could have the most interesting, innovative technology, but if it's a pain in the ass to integrate within the, either the existing IT system or, requires regulatory push or anything that makes it hard just to onboard, is more momentum in the direction of an established player.
Awesome. So to kind of shift things a little bit and to ask you guys some personal questions, or at least one personal question, how has your perspective changed since getting involved with investments?
That's interesting. Personally, I actually came from more of an environmental science and policy background. At least that's what I studied, and that's what I started my career in, and quickly decided that I would prefer to be on the innovation side and be part of creating solutions that can, use capitalism to scale. And so I think that was my perspective joining Energy Foundry and becoming more and more seasoned of an investor. It became very clear that there is tremendous impact to be had in all kinds of businesses. So some businesses were just never set up to be a venture-backed business. They don't have like distinctive IP. It's a hustling business, which is hard, but can be very fruitful depending on the accounts and the customers you're targeting. And those are some of those are businesses that venture capitalists just won't take the risk to fund. But at the same time, those are still very valuable businesses that, it would be super impactful if they continue to have success and grow. And they might not need venture funding in order to do what they need to do. And so I think my perspective on the investor role in innovation and startups, there's always going to be a segment of startups that just don't fit with venture investors. And that doesn't mean that they're not a good business that could create lots of wealth, solve a lot of issues around equity and inclusion and all of these important topics that we've been discussing. But they just don't have the flavor that investors are willing to fund. And so I think just understanding the innovation landscape with more nuance like that, and then being able to find where investors can actually add value and our dollars can actually create more impact by investing in certain companies that do align with our kind of risk profile.
Thank you very much. And Jeremy?
Yeah, it's an interesting question. The thing that I love most about being an investor really, was it was the privilege of being able to learn every day. It was really the privilege of being able to learn every day about these companies, about the approach to the market. You gain a unique position in terms of your understanding of how things work based on access to that subset of ideas. I realized that I love the mentorship of investing, especially working with founders, working with young founders. At a certain point, after you've seen enough companies, you start to be able to process and evaluate so quickly because you're like, oh, this is problem subset here. All the problems and hurdles kind of start to look alike, and you can identify where companies are in their journey pretty quickly and where the hurdles might be pretty quickly because you've seen a lot of stuff. And I think that's really hard to get when you're not in the flow of that or you haven't had that experience. I always felt, I think most venture investors, whether they'll admit this or not, invest on instinct with a checkbox on all the data and the financial piece, but really it's around the people and their ability to execute and a gut feeling on whether or not they will do that.
Thank you. So to kind of elaborate, the role of mentorship in startups, How do you guys really view that? And what are some recommendations that you have for startups in pursuit of quality mentorship versus advisors or advisement?
I think that good, especially in the early stage where Energy Foundry invests, like a good early stage investor also should feel like a really, a really collaborative relationship, because just as Jeremy said, there's a lot of pattern recognition that we have over, Energy Foundry is invested in 20 different companies. And so they, at this point, like all 20 of those companies are at different stages of development, different products, slightly different customer or segment, whatever. But at the same time, we see the patterns in development, and we want to help, share what we see in those patterns with all of the folks who we invest in, to help them with their path so they don't run into the same hurdles or challenges, or can get over it more quickly and scale faster. And so I think that for us, we have a very hands-on approach with the companies we invest in. We know, between the whole team, we probably talk with each company that we've invested in like once every couple weeks. If it's a company who is, farther along, they're not early stage anymore, then it's going to be less. They've got other great advisors and investors around the table to help them with that scaling portion of the business. But especially in the early stage, it's, talking with the CEOs, the management teams, like weekly, every other week, with whatever they're trying to work through, and trying to be like a sounding board, because every company is different, and we try to keep our perspective open to that, and also share, what we've seen, and try to bring networks, connections that we've developed in the industries to the companies that we invest in, so it's easier for them to make the sale, or to find, that advisor who's going to be a great industry, conduit to future customers or partners. And I think that true mentorship is, it's a lot of trust, to build up over time, a lot of trust and respect. And you can find that in certain investors. You can also find that in certain advisors, and it's kind of like a mutual commitment on both sides. So at Energy Foundry, it's like, as an investor, we're committed in you guys. But then, with advisors and others who you surround yourself with, it's also getting on the same page. Are they willing to help make connections for you? Are they willing to talk through difficult challenges, even when it's emotional? Because a lot of times things do get emotional with companies as they grow, and the various pains involved.
Yeah, there's a lot of therapy required, I think, to pursue startup ventures from almost any perspective of the market, because of just how unique it really is, and how difficult it is to achieve. Jeremy, what are your thoughts on mentorship and advisement?
Look, I think I kind of look at this as there are two types, and whatever you call it, an advisor or a mentor, it doesn't really kind of matter. That's just a brand, but I'll just bucket them under these two things, right? There's a difference between a transactional relationship and a transformational relationship. In some ways, I would think mentorship is more looking towards a transformational relationship. How do you help the person grow? How do you help the CEO grow, and therefore impact the growth of the company? But it's really around some of the softer stuff, and maybe more general and broad-based, and partially group therapy. But it, advisory in a transactional piece is really much more around, hey, we really need help with go-to-market in the energy efficiency of residential buildings, right? And who are the folks that know that market really well and can help us figure out what a strategy might be, right? In terms of that very specific. It doesn't mean mentors can't do that too, but I would say that advisors probably don't do as much of the other piece. Even though mentors can kind of do both. You find folks that I think it's good to find mentors in life. hubris is a super important thing to have as a founder of a startup. While you know everything, you totally don't know anything. And so take the time to work on yourself as you build these companies, because that's part of the growth opportunity, is for you personally as well as it is, financially. You're going to learn something through this, guaranteed, about yourself.
Yeah. Excellent. And really true. I mean, thank you both for sharing those things. It's very important, self-development and growth, and, really figuring out who to trust and how to be okay with trusting. It is a massive trust exercise, I guess, to embark on a startup venture in general. So finding the right people who to champion you, as well as serve as guideposts along the way, is definitely important. Since we are talking about utilities and we are talking about the impact and transformational change, how does the big push for renewables that's coming down the pipeline and other infrastructure projects around sustainability impact this space for startups?
Jeremy?
We already decided that you were getting all the hard questions, Judy. No, I think that this is a perspective actually that's grounded in my time at Energy Foundry, and something that you mentioned earlier, right? A commodity is a commodity, be mindful of LCOE in terms of generation and DER and these other kind of things. Where there are opportunities for services or software as a service, I think in the utility business, it's perhaps more interesting in where the innovation can happen, right? Orchestration, customer experience, any of those kind of things that utilities both struggle with, have traditionally struggled with, and are actively trying to solve. Markets are changing because of the price point around renewables. And that will lead to different deployment opportunities within distinct regulatory environments. So your mileage may vary, but I would say focus. If you're talking about a venture-backed, high-growth, scalable startup, I would think that focusing on the software is the place to be.
Great, thank you. Judy?
Yeah, I can add a little bit to that. So I figured Jeremy has a great perspective, having worked both at Energy Foundry in the past and now at Austin Energy. So as far as advice or other thoughts in this space, we find that making sales into utilities, and I think there was a comment earlier in the chat box about this as well, it's just really hard when there's like incumbent players who are service providers, known service providers. It's, you might have the best product and like 5 times better than theirs, but they are the known brand and often get picked. And so that's a really difficult environment to be a startup in and try to make sales. And I think that there are always some program, at least now there are some programs, maybe not enough, but some programs that are willing to take more risk with working with startups, piloting those technologies, demonstrating them, de-risking them on an actual, whether it's a microgrid or like a segment of the grid or something. And so those are very valuable programs in this space. And on a different note, it's also a highly regulated market. How the utility makes money is determined not by, supply and demand, but actually by policies and regulations. And so this might be a little bit of a bomb in the room for the utility folks, but I feel like one way that startups can ensure more long-term success is to also be involved in those conversations for like regulations and new rule changes and things that will make it easier for startups to make their prove their value in a way that's actually like compensated. And it's unfortunate that there are a lot of old rules in place in some instances that prevent like new innovation from being able to take hold just because there's little incentive. And an example I'll point to is in the energy storage market. With the rise in energy storage, grid scale storage, and energy storage developments, there's been a lot of rule change that's necessary on the state level, regional levels, and some of the more successful startups that are like developing energy storage assets are really involved in those conversations to try to open up new markets for themselves in new territories where it'll make economic sense now for energy storage. So just keep that in mind in these highly regulated spaces.
Can I add one thing to that, Joyce?
Yeah,
really,
sure.
really fast.
Mhm.
I totally agree with that one, Judy. The second thing is just from a sales perspective for startups, pitching to utilities. It's really like getting startup pitches, but like the nuance in the rules of the game have changed slightly. As you guys know this, but understanding your business, your customer, really understanding your customer and being able to empathize with them, not generally understanding the space, not generally kind of getting it, but understanding specifically that customer and that customer's environment and the drivers around it, and being able to articulately address all of those issues on calls will set you apart from your competitors. Oftentimes, big companies are differentiated in this because they have more resources to be able to figure that stuff out, but not always. So there's an opportunity for startups in that space because relationships are relationships. And when you have that opportunity, being able to demonstrate that not only do you know what you're talking about, that your product has value, but you understand why it has value within the context of that particular customer, is really, really valuable. And it will set you apart.
Fantastic. Thank you so much. Well, we are right on time finishing up, but I think this is a very engaging discussion. Jeremy and Judy, thank you so much for joining us today. I'm going to pass it back to Erin now to get us ready for the next segment.
Thanks.
Thank you, Joyce, and thank you, Judy and Jeremy, for that conversation. It was really a necessary conversation. Also, thank you, Dylan and David, for your conversation in the comments. I think really insightful. So thanks everyone for your participation. Remember, you can keep interacting with each other in the chat. We're going to take about a 5-minute break now, and then we'll be back with the startup pitches. So we'll have 2 categories. We've got smart utilities and smart cities. We've got 7 really great teams that we'll be hearing from. So take a 5-minute break, get some coffee, get some water, and join us back at 11:20 for the startup pitches. See you all soon.